Alright, let's cover WWAT.OB. This is the long-term chart. It is a typical chart of a penny stock, and the stock is moving sharply higher now. It is up, let me see today. Right now it is up 19% at $1.01 now. And the short-term chart is bullish. The stock is above the 50 days and the 200 days moving average. After this short period of consolidation, it is moving higher again, so there's nothing we can point to the chart. However, fundamentally, I've been checking some issues, and I dislike it, but let's go over details. This is my valuation model for the next 3 years. Initial share price, it is about $1 now, and the share count is 165 million shares, but there's also 51 million of preferred shares and convertible shares, and they have the very bad habit of diluting shareholders' value. By a lot. Look here. Let me try to show you this. Just a second. Okay, 1 year ago they had 120 million shares outstanding. Then on this press release they had 151 million, and over the latest share count at May 10 they had 165 million shares outstanding. So the share count keeps rising because the company in fact has been losing money every quarter and every year, and a lot of money, and it needs to issue shares to keep operations going. Well, this doesn't tell us much about the future, but it tells management doesn't work in shareholders' benefit, I believe, because the market cap continues to increase, and people that bought this share see their value being diluted for many more shares. Okay, let me just put here. Of course, people that bought here are happy, but the ones that bought earlier, say here, they're not happy at all. Okay, but so I put here a 20% dilution factor per year, and this gives me a final share count of 285 million shares for 2009. Initial revenue, this is the revenue the company had over the past 4 quarters. It was 16.3 million, and the company gave guidance of something between 30 and 35 million in revenues for 2007. But I dislike it when OTCBB companies give this kind of guidance. I'm always afraid of heavy dilution coming. Anyway, I put here a 2, which means I expect revenues to grow 100% a year going forward, just for the argument's sake, and let's think they're being true about that guidance and going forward. So I put here 2. But anyway, this gives me a 130 million revenue number for 2009. But net profit margin over the past 4 quarters was minus 41.8%. So I expect these losses to be diminished, but the company to have just a 5% net profit margin in the future. And this gives me final net income of 6.5 million, and with this share count of 285 million gives me just 2 cents of earnings per share estimate for 2009. If we apply a 20 times earnings multiple to this, we get a share price of 46 cents. This is not really 2, it is a bit more than 2, but it is rounded to 2 cents. $46 per share in 2009. Since the stock is at $1 now, I really find it not attractive. But okay, there are many risks to my estimates, but I don't like management's attitude of always diluting shareholders' value a lot and giving this very high guidance. And if you notice, Q1 numbers were way below Q1 2006 numbers. So Well, good luck if you want it, but I see a lot of risk in these OTCBB companies, and particularly this. I think there's a lot of hype around this sector, but this stock seems very overvalued to me. But I can be completely wrong. I hope so. Good, but on a 1 to 10 scale, I give it a 4 because the chart is beautiful. So I wish people buying are right, and good luck. Bye.